The Iran conflict has become one of the biggest geopolitical shocks of 2026, and it's sending waves through global markets, oil prices, supply chains, and even everyday consumer costs. Today, I'll break down how this conflict is affecting the global economy using clear, simple explanations based on the latest verified data. One of the biggest impacts comes from the closure of the Strait of Hormuz, one of the world's most important energy choke points. Before the conflict, it carried about a quarter of global seaborne oil and a fifth of global LNG. The closure has caused massive disruptions in global energy supply. Iranian strikes also damaged Qatar's Ras Laffan LNG complex, and restoring even 17% of its capacity may take 3 to 5 years. The conflict has removed 9 to 11 million barrels per day of crude oil from the global market, according to the International Energy Agency and ANZ Bank. This is the largest supply disruption since the 1970s energy crisis. Analysts now expect the oil market to flip into a 750,000 barrels per day deficit this year, a huge reversal from earlier forecasts of a surplus. Stock markets around the world have been hit hard. In March alone, South Korea's Kospi fell nearly 20%. Japan's Nikkei dropped almost 8%. India's Sensex fell around 2.7%. U.S. markets dipped but were more insulated due to domestic energy production. These declines reflect fears of inflation, energy shortages, and recession. Gold, bonds, and the U.S. dollar surged as investors fled to safety. The conflict is pushing inflation higher worldwide. Fuel shortages have caused panic buying in countries like Vietnam, and consumer prices in Gulf states have jumped 40 to 120% due to food import disruptions. Central banks may delay interest rate cuts or even raise rates because of renewed inflation risk. The conflict is disrupting global supply chains far beyond oil. Auto industry economists warn of rising costs, tighter credit, and weaker consumer confidence. Fertilizer and raw material costs are rising, which could push food prices even higher. Aviation routes across the region have been shut down, causing global travel disruptions. Even though U.S. auto sales forecasts remain steady for now, experts say prolonged conflict could change that. A temporary UDS. Iran's ceasefire briefly cooled oil prices below $100 per barrel, but they remain far above pre-war levels of around $70. Experts warn the ceasefire is fragile, with unclear terms and major trust issues on both sides. Analysts say fighting could resume later this year if the Strait of Hormuz doesn't fully reopen. The Iran conflict is reshaping the global economy in real time. Energy prices remain volatile. Inflation risks are rising. Supply chains are strained. Markets are unstable. Some regions face humanitarian concerns. A UNDP study estimates Arab nations alone could lose $120 to $194 billion in GDP due to the conflict. And that's how the Iran conflict is affecting the global economy, from oil prices to inflation to global markets. Thanks for watching. If you want more clear explanations of everyday topics, hit like, subscribe, and check out the next video in this series.